All right, so today we're cracking open the Q3 2025 financial report for a really unique company called Mindark. Now, they run a game called Entropia Universe, but it's so much more than just a game. It's a real, functioning economy. So how does a business like that actually work? Let's dig in.
So, let's just start with the biggest question that frames this entire thing. Can a video game actually have a real, functioning economy? And I'm not talking about some crypto or Web3 speculation. I mean a real, stable, cash-based economy that's been chugging along for decades. Well, Mindark's answer is a resounding yes. Okay, let's dive into how they pull this off. Because look, to get what their financial report is even talking about, you have to understand this one core concept. It's all about building a universe with real money baked right into its DNA. The whole thing is built on this idea they call the real cash economy, or RCE for short. It means that everything in the game, from the stuff you mine to the buildings you own, has a calculated base value in real-world money. Think about it. It's a virtual world where your digital stuff has a real, guaranteed cash value you can count on. And get this isn't some newfangled experiment. Mindark has been successfully running this real cash economy for over 20 years. And that kind of track record, that builds an insane amount of trust, which, is the bedrock of any financial system, whether it's real or virtual.
The entire system really hinges on their in-game currency, which is called the Project Entropia dollar, or PED. And its value? Well, that's the absolute linchpin of this entire model.
So 10 of these PED is always, and I mean always, without fail, equal to $1. Bam! It's a fixed, guaranteed exchange rate. You can deposit real money to get PEDs, and, this is the crucial part, you can withdraw your PEDs for real US dollars at that exact same rate. That direct two-way link is what makes the entire economy tick.
So that's the obvious next question, right? If players can actually cash out their winnings, how does Mindark make any money? I mean, where's the cash coming from that we see in their reports? Let's take a look at their business model.
All right, so their business model basically boils down to three main pillars. First, you've got your direct-to-consumer revenue from player spending. Second, another consumer stream from selling virtual deeds. And third, a business-to-business model where they let partners build on their platform.
Let's break down that player spending, because this is where it gets really clever. A big chunk of their revenue comes from, well, wear and tear. Just like in the real world, your stuff in the game actually decays and you've got to repair or replace it. They also take a tiny fee on player auctions, and of course, they sell some virtual property directly. It's all designed to keep the currency moving and being used up.
Now, their B2B model is also pretty wild. Mindark actually lets other companies, they call them planet partners, build entire worlds on their platform. These partners create all this new content, and then they split the revenue that's generated on their planet with Mindark. It's basically a franchise model for a virtual universe, a potential blueprint for a more decentralized metaverse. Maybe?
Okay, so now we get to the business model. Let's get to the juicy part, the numbers. How did Mindark actually do in the third quarter of 2025?
First up, let's talk turnover, which is basically their net sales. They saw a nice little increase from 19.4 million Swedish kronor last year up to 19.9 million this year. But here's the interesting part. The report says this growth happened even though the US dollar was weaker. And since their whole economy is pegged to the dollar, a weak dollar is bad for them. So the fact that sales still went up, that means this result is actually way stronger than it looks on paper. But here's where the story gets a little more complicated. While their revenue went up, their operating profit actually went down, showing a bigger loss. So what's going on? Well, the report tells us it's all about increased costs. They hired more people and had higher depreciation from some major investments in the platform. And that, my friends, is a classic sign of a company spending money now to hopefully make a lot more money later.
So, what's the big picture on their financial health? Well, on the one hand, they're sitting on a very healthy 24 million Swedish kronor in cash and, get this, zero interest-bearing debt. That is an incredibly solid foundation. The challenges, as we just saw, are that temporary dip in profit because of those big investments and the fact that their business is so sensitive to currency swings.
We know they're investing a ton of money, but what exactly are they investing in? Well, it turns out the third quarter was a huge one for them. I mean, this quarter wasn't just any quarter. It was packed with massive strategic moves, all aimed at one thing: growth.
And what a quarter it was. I mean, think about this. On July 22nd, they finally launched on Steam. Hello, millions of new potential players. Then, during that same quarter, they completely revamped the experience for new players and started rolling out some really fascinating AI-driven features.
Let's zoom in on those tech upgrades for a sec. I mean, they didn't just tweak a few things. They built a whole new planet, Setish, specifically for beginners. They gave the graphics and the UI a major facelift. And this is cool. They brought in AI-driven characters to make the world feel way more alive. Oh, and they also used AI to translate the entire game into 49 languages. Talk about expanding your global reach.
Okay, so you've got rising costs on one side, but these massive strategic launches on the other. What's the official word from the CEO? How are they framing this pivotal moment for the company?
Well, here's a key line straight from the CEO, Leif Evander Anderson. He's projecting a ton of confidence, saying the company is financially stable, their strategy is clear, and all those big investments we just talked about are starting to pay off. So what he's saying is, hey, we're stable, we know where we're going, and all that money we've been spending, it's starting to work. It's a message that's all about patience and looking ahead.
So, look, if you remember just one thing from all this, let it be this: Mindark as a financially stable company. They've got no debt and a solid chunk of cash. But right now, they are deep in a heavy investment phase, pouring money into tech and marketing to bring in a whole new generation of players and deal with the challenges of a post-pandemic world. And all of this leaves us with one last, really fascinating question to chew on. In this era of constant hype about the metaverse and blockchain, is this proven 20-year-old real cash economy a forgotten blueprint for the future of digital worlds? Or is it just a fascinating relic of the past? And honestly, the answer probably depends on whether all those big bets they're making right now actually pay off.